Job growth remains strong last month despite high inflation and a banking industry in turmoil. Labor Department's latest report shows employers added 253,000 jobs in April. That is 73,000 more jobs than what economists had predicted for the month. The nation's unemployment rate is now at a low of 3.4%. Ed O'Keefe reports from the White House.
The labor market continues to defy expectations. Job growth in April blew away estimates and led to the lowest unemployment rate since the 1960s.
I think we're making real progress.
Hourly wages also were up higher than expected. April saw the largest monthly gain in more than a year. But that's something economists say could spell trouble.
Weird to say, but wage growth is so strong that might make the Fed nervous about future inflation and raise interest rates, which of course will hurt the economy down the road.
Those higher wages are helping fill jobs. Starting pay for lifeguards near Minneapolis went from $11 to $19 an hour.
It's been a pretty substantial increase to try and entice people and compete in this competitive job market.
But other major companies like Lyft, Deloitte, and Whole Foods are laying off workers, and fears of recession persist, in part because of struggling regional banks. Two more took big stumbles this week on Wall Street. Adding to those fears, the potential failure to raise the country's borrowing limit by June 1st, which could lead to economic calamity. Today, President Biden attacked Republicans for trying to extract billions of dollars in cuts in order to raise the limit.
We're not a deadbeat nation. We pay our bills.
Now, Republicans argue there's no better time to cut spending when you have to talk about raising the debt limit. The president is scheduled to host the top four congressional leaders for a big meeting here next Tuesday to try to hammer out a deal. With just under 4 weeks to go until the Treasury Secretary says the country will be unable to pay its bills. Catherine?
And O'Keefe, thanks for your reporting at the White House. Daniel Altman joins us now. He is the chief economist at Instawork. So let's talk about this jobs report. Heading into the new numbers, there was talk of an interest rate pause. Is that still likely?
Well, Catherine, I think that the Fed is still going to consider that pause because they're focused on prices. They are not focused on the jobs numbers. They're not even that focused on wages. Jerome Powell, the chair of the Fed, said just this week that he didn't think wage growth was a cause of inflation. It wasn't a driving force behind inflation. And I have to agree because a lot of the people who are doing flexible work via our platform are doing it to make extra money so they can make ends meet. With prices high and interest rates high, they need that extra income. And so it doesn't seem like the wage growth, even though we saw a somewhat large number in this most recent report, is out of control. I think that the Fed is really looking for a more generalized slowdown in economic activity, which could help to pull down prices across the economy.
So let's take that a step further. The average hourly earnings has gone up about 4.4% in the last 12 months. Is that about, I think you're saying, inflationary pressures or something else?
Well, it is people trying to catch up with prices, right? They don't want their spending power to decrease. And that's been similar to what the rate of inflation of prices has been, around 4 or 5%. So they're just managing to keep up. The question is, what is driving that underlying inflation? We know that there are a lot of supply side causes. That is the things like the supply chain issues that we've had, energy prices, other things that might have been caused by the war in Russia and Ukraine, between Russia and Ukraine, the housing shortage. With more affordable housing, we wouldn't see rents going up quite so much. There are many causes of this, but the Fed only has a couple of blunt instruments to deal with them, and that's tightening credit in different ways. And that's supposed to draw down the overall activity in the economy. If I had to say one more thing, I'd say, we are seeing the job market slow down. If you look at the additional jobs that have been added, especially with the revisions to prior months' data in this week's report, we are slowing down in terms of how fast we're adding those jobs.
Yeah, Daniel Altman, thanks for your analysis and expertise.
My pleasure, Catherine.